As the world pivots towards more sustainable practices, green energy has emerged as a key player in the fight against climate change. This shift presents a significant opportunity for investors looking to future-proof their portfolios. Green energy stocks are increasingly attractive as governments, corporations, and consumers prioritize sustainability. Investing in these stocks is more than just a trend. It's a strategic move towards securing long-term financial growth in a rapidly evolving market. This article delves into why green energy is a necessary addition to your investment strategy. The global shift towards green energy. The transition to green energy is driven by regulatory changes, technological advancements, and shifting consumer preferences. Governments worldwide are implementing regulations to reduce carbon emissions, accelerating the growth of the green energy sector. For example, the European Union's Green Deal aims to make Europe the first climate-neutral continent by 2050. Similarly, the United States has rejoined the Paris Agreement, signaling a renewed commitment to combating climate change. Technological advancements are also crucial in the adoption of green energy. The cost of renewable energy technologies, such as solar panels and wind turbines, has decreased significantly, making them more competitive with traditional fossil fuels. Innovations in energy storage, like battery technology, are addressing the intermittent nature of renewable, enhancing reliability. The evolving regulatory framework. The regulatory landscape around green energy is rapidly evolving, with stricter standards for carbon emissions and pollutants. This drives companies to innovate and invest in green technologies. The European Union, for example, has introduced a taxonomy for sustainable activities, clarifying what can be considered environmentally sustainable. These regulations encourage alignment with stricter sustainability criteria, influencing long-term returns. Economic viability of green energy stocks. Investing in green energy stocks offers both environmental benefits and financial returns. As global demand for clean energy grows, companies leading in renewable technologies are experiencing significant growth. For instance, firms involved in solar panels, wind turbines, and electric vehicles have seen their stock prices rise, with expectations of continued growth as more countries adopt green energy policies. Green energy stocks are often less volatile than traditional energy stocks, as they are less susceptible to fluctuations in oil prices and geopolitical tensions. This stability makes them a reliable source of returns for investors. Emerging sectors in green energy. New sectors like green hydrogen and marine energy are emerging with the potential to revolutionize the market. Green hydrogen produced through renewable energy could play a crucial role in decarbonizing industries and transportation. Meanwhile, marine energy technologies such as tidal and wave energy are gaining traction. For investors, these sectors represent an opportunity to enter a potentially lucrative market early on. Institutional investors' role. Institutional investors, including pension funds and insurance companies, are increasingly financing the transition to a green economy. These large players mobilize significant capital towards renewable energy projects and influence corporate practices by demanding sustainability commitments. Energy storage technologies. One main challenge of renewable energy is intermittency. The sun doesn't always shine, and the wind doesn't always blow. Advances in energy storage technologies, particularly in batteries, are crucial to overcoming this challenge. Investments in companies developing advanced storage solutions like redox flow batteries can offer growth opportunities. These technologies are also essential for deploying electric vehicles and smart grids. Geopolitical risks and dependency issues. The rise of green technologies increases the demand for rare materials such as lithium for batteries. Dependency on these materials, often sourced from geopolitically unstable regions, introduces risks for companies in the green sector. Investors should assess companies' supply chains and their ability to manage these risks. International trade relations and geopolitical tensions can also affect renewable energy market. Financial innovation and new business models. Companies in the green energy sector are experimenting with new business models, such as subscription-based services where consumers pay a fixed fee for access to solar or wind energy. These models offer stable revenue streams for companies while making green energy more accessible. Additionally, innovations like blockchain could revolutionize how green energy projects are financed, enabling fractional ownership and enhancing transparency. Diversification and risk management. Diversification is a key principle of investment strategy, and green energy stocks offer an excellent opportunity for it. The sector encompasses various industries, including solar, wind, hydroelectric, and electric vehicles, allowing investors to spread their investments across different market segments. This diversification helps mitigate risk and increase the potential for returns. Long-term growth potential. One of the most compelling reasons to invest in green energy stocks is their long-term growth potential. The transition to a low-carbon economy is a multi-decade process requiring trillions of dollars in investment. As governments and corporations commit to reducing carbon emissions, the demand for renewable energy technologies is expected to skyrocket. In addition to regulatory support, consumer demand for green energy is also expected to drive long-term growth. As awareness of climate change increases, consumers are seeking sustainable products and services. This shift in consumer behavior is likely to benefit green energy companies, well-positioned to meet the growing demand for clean energy solutions. Government incentives and corporate sustainability. Governments are implementing incentives to encourage the adoption of green energy, including tax credits, subsidies, and grants for renewable energy projects. These incentives create a favorable environment for green energy companies to thrive. For example, the U.S. offers tax incentives for renewable energy projects like the investment tax credit for solar and the production tax credit for wind. Corporate sustainability initiatives are also driving green energy growth. Companies like Apple and Google have committed to powering their operations with renewable energy, creating significant demand for green technologies. Investing in companies with strong sustainability initiatives provides financial returns and positive social impact. Challenges and considerations. While green energy stocks offer significant opportunities, they also come with challenges. The sector is still relatively young, and many companies are in early development stages, which may lead to higher volatility and risk. The green energy sector is heavily influenced by government policies, which can change, potentially impacting the sector. Before investing in green energy stocks, it's essential to conduct thorough research, evaluate the financial health of companies, and stay informed about industry trends and policies. Diversifying across different segments of the green energy market can also help manage risk. Investing in green energy stocks is a strategic move toward a sustainable future and long-term growth. As the world shifts to a low-carbon economy, these stocks offer benefits like growth, diversification, and ESG alignment. Though risks exist, careful selection and industry awareness can yield financial rewards and support a greener planet. If you found this video helpful, be sure to like it and subscribe for more content like this.